Good morning, traders. Welcome to Wednesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we need to check the news, see what's going on today. That way we're not taken by surprise by anything or, thrown off guard with a surprise news event. So starting off with the news announcements on the left side there, we've got, not a whole lot in the morning session. We've got some news at 7 o'clock. Mortgage refinances, MBA purchase indexes. There's not really much. And then 10 o'clock, Fed Chair Powell testifying again. Not a surprise, he's going to be testifying for a while. Also at 10 o'clock, we have the new home sales for January, forecasted at 855,000. Previous is 842. New home sales month over month for January, the medium version, 2.1% versus the previous 1.6. And then, of course, today is Wednesday, so 10:30, crude oil inventories. Forecast is negative 5.19 million. Previous was negative 7.258 million. And we can also derive some information off of the API report, which comes out every Tuesday at 1600 or 1630. And this will usually give us an idea as to kind of what to expect. So if we go back to yesterday and we look, API crude oil weekly stock came out at a build, 1.026 million. So it was worse than expected. The anticipated number was negative 5.372. And if we look at today's price action, we have the inventories right there, forecasted negative 5.190. Well, the API report came out positive. So realistically, this negative number here is likely going to come out on inventories at a very light negative to maybe even slightly positive, which means that it's going to be a little bit worse than expected typically, or at least more often than not. Aside from any of the other news, we don't really have much else going on. 10:30's got FOMC member Brainard speaking. Doesn't really move the markets a whole lot. And then in the afternoon at 1300, FOMC member Clarita speaking, another one that really doesn't move the markets a whole lot. So the news calendar relatively light, but that's all right. Now we can jump into some charts, get into some fun stuff for today. Today being 2/24 of 2021. First up on the list is going to be the NASDAQ, and where we stand right now on the NASDAQ is kind of a tipping point. We've got that big blow off. We hit the megaphone lows. The megaphone lows, it actually went through it even further on that giant slide to the downside, and then reversed back up. With a big reversal back up, this is where traders are going to be looking for one of two things. Sellers who got stuck trying to short here, and, well, I'm sure there are plenty of them, but realistically, there was a nice two-legged move down. So, I mean, given the distance, the range, the size of that kind of move, those two legs down was still almost 2%. That's fair, right? It doesn't necessarily have to go back down to the lows when these little small moves like this are still 2%. So that is something to keep in mind, that although the sellers may have gotten in, and although they may have been trying to get a rotation back down to the lows, realistically, the size of this move is so large that a lot of traders are probably exiting before it even gets anywhere near their targets, from a psychological standpoint at least. And that's likely what some of this is doing down here, where we're hitting these negative half DPs, bouncing right back up again. Now we're back over settlement. We're back up to the positive half DP and at the top of the channel. This is where things are going to get a little bit weird, because we've got to see, are the buyers supporting this, right? Did they buy this low and they're going to be breaking higher with an anticipation of getting back to the top of the megaphone? Or is this channel high going to hold, which is derived from the bottom of the megaphone down, and act as resistance and push the market all the way back down towards the lows? That's kind of what we're waiting to see right now, and we haven't had a new high, and there's been a lot of trapping around here, so we need a bit more info until we hit it too hard. Then over on the S&P with what appears to be kind of a stubborn channel. I was looking at this like a megaphone, just like the NASDAQ, but really didn't get down to the megaphone lows perfectly. I mean, if we draw it exactly off of the lows across the bottom, they actually missed it. If you fudge the lows a little bit, you can make it so that it visually looks like it got hit. But realistically, it didn't technically hit that level. So with that big reversal off the lows, going backward a little bit and seeing, well, if there was such a strong turning point here, what else could have potentially caused this? And I'm kind of left back looking at the channel like, man, this earlier channel that was forming here just does not want to let go of the market. It was holding support, support, broke, resistance, 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 support, resistance, 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 support. When it finally broke through, popped back up, got a little lower, it got really gross around those channel lows. Looked like it was going to completely invalidate it. And then held it as resistance. So it's like this channel, it's just the S&P does not want to let it go. Realistically, we are beginning to widen out a little bit. So if we had to put a bracket on, it would probably just be deviating it a bit further out. But realistically, this could end up just being a very, very wide channel with kind of multiple tiers to it that are definitely not equally spaced. Gold moving in a bit of a sideways action type scenario here. Kind of like maybe they're forming a bit of a paused wedge looking for a continuation breakout. The wedge could be a bit wider as well. That is honestly a bit more likely. Where it stands right now, the big thing here is that the market's not really necessarily moving up or down. We're cycling off the big level of 1800 and it's just bouncing back and forth. The last time we were at 1800, obviously, caused just a bit of volatility. And now that we're back again, we've got it acting as a bit of volatility. Not really a big surprise. The market's just kind of hanging out, not really doing much of anything here. As far as a zone of interest, buyers are going to be looking to buy low, obviously. They're not going to want to buy way the heck up here, especially knowing that there's potential falling resistance. Makes a lot more sense for buyers, again, to be looking at that wider wedge somewhere down here, back around, guess what? The 1800s. Who would have thought? Now, if we can get a little bit of a bounce off of that and a continuation back up, we still have that big zone of resistance up here in the 1820s to 30s with that L4 for the bears. So it's by no means out of the woods. Bad pun for the bears there. But sellers will be looking for more continuation, even if it does go just a bit further up. Then jumping over to crude oil with some sideways action here as well. We've got crude oil inventory day today, so that will have an impact. Yesterday's big slide off to the downside really just allowed buyers to buy on a really nice dip. We've got that massively aggressive rally higher, which didn't even really pull back. It just kind of went sideways and just kept going up and up and up and up and up. It finally dipped back, and where did it dip back to? To where the beginning of the move all started. That's what happens with spike in channels. You get the spike up, then into the channel, and typically the market's going to pull back to the beginning of the channel point. And, well, that's exactly what it did. Bounced off of it, nice support, came back, even held it again, trying to get another spike in channel. Sellers didn't work, though. They tried getting it to go, but they failed. And with those sellers failing, now we have the rotation back to the upside. And it's kind of creating almost an equalized move down, pause, up. Kind of like a twin reversal, just not as clean. And, well, if they start breaking back above the highs, there's nothing really in their way anymore until we start rolling back up towards those highs again. This is not a channel that we're dealing with on crude oil. If I put the channel on the highs, you'll see what I'm talking about. The channel is actually a little bit further up, so there may be some unfinished business that the market wants to try to finish off. Otherwise, though, if we are going to see a bit more of a pullback, even from a measured leg perspective, it puts us right at the bottom of the channel. I mean, as far as timing goes, you can't really get much better than that. Just the only problem is where it is now. It's just in the middle. We've got to wait for a bit. Then over on the euro, we've got a bull channel working its way higher, still going sideways here as well. Everything's kind of going sideways after yesterday. I can't really blame the market, but with this sideways action, we have something that is setting up a very, very big interest, and that would be a rep L2 to the upside. We've got that first reversal higher, and when we reversed higher, the big question here was, is this move up strong enough to reverse the trend? These little minor swings. And if you remember a few days ago, we were talking about how we've got to break that major swing as proof that the trend is actually trying to get back higher. Well, we did break that, and although it didn't break it very well, now that we're rolling back over, a lot of traders are going to be looking to buy into the dip. The dip being the bottom of the channel. You can see a problem that's standing out pretty obviously. This isn't the kind of price action that you typically want to see around a successful breakout. When it breaks out above the highs, the next time it comes back, it shouldn't have a hard time. That's something seems like it might be wrong here. We're holding it as resistance, and now we have a mid-peak trap that could be looking for a larger rotation back down, which is great for this scenario because buyers are looking for the lows of the channel. So buying way up here is obviously problematic. A lot of traders are trying to buy for another breakout continuation, and it's just not going. So with that failure, those buyers start jumping ship, and it causes a move down. Sellers realize that. They try selling along with it to get that second leg. And if we look at a second leg measure, although it's not perfect, actually, let me get the exact lines just so I'm not eyeballing it and using a bit of bias here. Let's get the exact level on there. Yeah, no, it's actually better. I was against myself. It lands it right on top of the L2. That's the rep L2. That's at the bottom of the channel. We've got previous major structure, and we've broken a major swing. Everything is lining up for the buyers to be looking for the dip. It's just a matter of actually getting the dip. Switching gears then over to the cryptocurrency side of things with Bitcoin. And Bitcoin, the big thing that stands out here really is that sellers were looking for the megaphone low. And the megaphone low never hit, which is a very, very bullish indication. Now, along with that bullish indication, we were also seeing some fairly obvious reversal patterning going on here at the bottom, with sellers giant wicks, failing to go through the lows, selling attempt not going, two legs down, still couldn't keep going. There's a lot of problems for the short side, which if you're long is great. The big thing that stands out here is that sellers would have been looking for a broken or an L1 to hold down to, maybe even an L2 a bit further up. And realistically, it failed. And with that failure, we can now see them successfully holding off a broken L1 and rotating back up. And we're now into that broken L2 territory. The only thing that we've really got to work with now is this falling resistance. And this falling resistance, initially, it was looking like it was holding pretty well, and then it came up and, ooh, man, it looked like it was going to get that big breakout, and then fell flat on its face. It doesn't mean that the breakout is unsuccessful, but what it does mean is that likely buyers are going to be looking to buy a bit deeper. And what better place than where earlier sellers got trapped, right on top of the negative half DP, right on top of gargantuan structure. Everything is landing on that higher low for buyers to try to stack up. If it even dips, we know how Bitcoin operates. When it goes, it might just leave everything in the dust. And then finally over on Ethereum, which did actually hit the megaphone low, that's the type of formation that a lot of sellers were looking for. And remember, we also have the induction of the Ethereum futures and everything else, so shorting and all of that fun stuff is applicable. And I think it's safe to say they got a pretty good short. Well, now that we've rotated and we've hit the megaphone low, and not only did we hit it, we successfully confirmed it. Fantastic bounce off of that low, and then led into a higher low and another break higher. The only thing that we don't have is a structural swing break, meaning that we've got this move down, a lower high, another breakdown because of that giant wick. That's what messes everything up, because the next swing high is way up here, and we haven't broken that yet. So even though we have broken above this little swing, this isn't a confirmed swing. Remember, go through the Day Trading Academy if you haven't gone through there in terms of confirmed swings. But this is not one, and that's going to be a situation where that's going to get a lot of traders who are potentially stuck or getting trapped above, when in reality, that's not even a swing to worry about. The big one is going to be up here, and that's going to be in the 1800s, which, shocker, big psychological level again. It's not like it hasn't seen plenty of volume there already. So when the market starts coming back to that area at around 1800, obviously, there's going to be some fireworks there. If we look at the overall order flow, we've got an L4 that's waiting right at the top of the potential megaphone top. We just cycled off a megaphone low. Realistically, the megaphone top would make sense, right? It's kind of where the market's going. So as far as upside objectives, it's still definitely bullish, still continuing higher. And until we start hitting some of these resistance zones, it's probably just going to keep going. Even if it does dip lower, sellers who are stuck down here have already been given plenty of chances to get out. So even if it does pull back, I don't think there's going to be any sellers who are stuck or shorts exiting. So it's more likely just going to be buyers looking to accumulate anyway. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Till the next one, I hope you have a fantastic trading day today, and we will see you all in the next. Thanks.